edition of the London Session Open. Today is July 20th, 2020, and it's almost 10 a.m. in London. And we have about 12 to 10 minutes to take a look at the markets and talk a bit about what we should be focusing on for this week. Now, if you're new to this market update, my name is Alejandro Zambrano, and I'm the Global Chief Market Strategist. And I've been doing this for a number of years, and I've been trading with my own money since 2016. And I had my ups and downs, and mostly over the last couple of years is slowly and going upwards, which is the important thing. And that is, actually, I wouldn't call it slowly, but definitely going upwards, equity-wise. And that is what is ultimately important when you trade. And hopefully I can share some of what I know with you guys. All right, so let's begin with a few slides. And we're going to begin with a general market overview and macro stuff. Let me show you exactly what we're gonna be doing. So we start out with the macroeconomic update, week ahead, then we take a look at the charts. All right, so let's just begin with sort of what we're focusing on a bit. So we're focusing, of course, on COVID-19 new cases. So this is worldwide cases, and on the 7-day average, per day over the last 7 days, we have about 273,000 new cases, and about 7,000 people are unfortunately dying every day because of the virus. Now, we're not seeing, you remember when we saw this, we got a nice sharp, well, not nice, but we had a sharp rise in the very beginning, and that was followed with a sharp number of deaths just like 2 weeks later. We haven't seen that yet, but we are slowly going upwards here. And the fact that we haven't seen more deaths, the fact that we have a lot of QE, the fact that we could potentially have a vaccine by this time next year is keeping markets bullish. But that could change. Now, here are the US COVID-19 cases. You can see that they have been going upwards, and by the end of last week and also the weekend, we had some really strong numbers, new records set, and effectively more than 60,000 new cases in the US. However, new deaths have been capped at around 1,000 new cases. And, you know, people going into hospitals and increasing. So ultimately, even though, you know, some of these hospitals are probably prepared and people have a better understanding now of what actually, how we can improve people's with this condition, if they get overwhelmed, they get overwhelmed. And our perspective from investors, I think, and traders, if we do trade above, if we do start to see more than 1,000 cases, we'd effectively take out this high and could probably start to trend upwards. And I think at that point, we're going to start to see the market struggle more. And that is what I will be focusing on. Now, what's up for the week ahead? I think there's not going to be too much really from a trading perspective until Friday. This when we have the Eurozone, UK and US market PMI indicators, they're leading indicators. And you can see here for the last reading in the Eurozone area, this is the composite, combination of manufacturing and services. You can see that it was a 48.5. Now, this time around for July, people think that the US economy went back to growth, which makes perfect sense because in the EU, they are opening up their economies and people have been going back to work to some extent. Restaurants are opening and so on. So that would make a lot of sense. In the UK as well, services PMI anticipated to go from 41.1 to 51. And in the US, from 49.8 to 51.3. And in the manufacturing sector, from 47.9 to 50.2. So that's really what we're looking at. If these numbers are better than expected, you know, higher stock markets, that will probably be something that we're going to talk about early next week as well. So that is really the highlight of the week. Now, of course, if you're trading shares, Twitter is reporting earnings, Tesla is reporting earnings this week as well. So that is something we'll keep an eye on. And initial jobless claims, obviously interesting and important, but it's been going lower and lower over the last couple of weeks, and I don't think this is going to change as the US economy is reopening. So effectively, it's just by the end of the week, which means that it's going to be a lot of technical trading. I mean, I think that's where the market is going to be focusing on, like where are the support levels, where are the resistance levels. It might be even a bit boring, unfortunately, until we start to see, people getting bullish again on the back of these numbers, possibly. So that's the week ahead. And just a little summarize what happened last week. So most of the data over the last few weeks have been better than expected. Things that did not really work out though, in the UK, you got GDP. People thought GDP was going to increase with 5% month over month. Instead, it just increased with 1.8. And to give you an idea, the UK economy is 22.8% lower this month, or in the reading in the month they had here, compared with the same month last year. So if I remember correctly, this was for May. On the other hand, labor market in the UK unemployment rate actually was slightly better than expected, so 3.9 instead of 4.7. Of course, after summer and so on, what's going to happen here? Well, if the economy remains really soft, obviously unemployment rate should tick up as it done in many other countries. In Australia, their unemployment figures were better than expected. The employment figures were better than expected, created almost twice the amount of jobs that was anticipated. We've seen the same in places like Canada and the US recently. China, second quarter GDP was stronger than anticipated. US retail sales was as well stronger than anticipated. And the ECB rate meeting didn't really give us or take anything because pretty much left things unchanged. So overall, the data was good last week with the exception of the UK data. The week before that, the data was good. And the week before that, the data was good. Of course, next week, we still have 2 more weeks for this month to go, and then we'll have the non-farm payrolls. Actually, could be non-farm payrolls. Non-farm payrolls should be on the 7th of August. So let's take a look at the markets, and we're going to let's just begin with the currencies. So this is the euro versus the USD, and the euro is going upwards, which is also quite interesting, guys, because what has happened here is that we're supposed to have some sort of a rescue deal for the EU, and they're going in the right direction, but they haven't really managed to get that sorted as far as last time I checked the news. And I think here that I'm a bit surprised it's going upwards, but the trend was bullish and it is upwards. So last week we said people are probably going to be buying down here. They didn't. They just bought here, and I have now pushed up the trend of funding level to 1367, which is down here. And if we do come down to something like 1413, I think some people are going to be buying. We're now took out this June high, and if we look at the big picture chart, we're now moving very close to the all-time high. Not all-time, the yearly high from March 9th here. And if we take that level out, we go a little bit upwards, but I wouldn't get too excited. I mean, take out this level, yeah, it's going to be interesting. But if you just look at something like even the dollar index, so this is the dollar index, this is your weekly chart. So the dollar index is very close to its low from March, but we have this overall bullish trend, and we're just around support. And I don't really see where this should trade much lower, really. I don't see that. But of course, we're not going to fight the trend. The euro trend is bullish. It'll continue to be bullish. No question about that. All right, GBP versus the USD. This is going upwards right now as we speak. And over the last couple of days and weeks, days actually, last week as well, said look to buy here. We went upwards. Look to buy here, went upwards. And I'm continuing to do that. I think we can go a bit higher, maybe to 126.25. We'll book some profits there. Unless you're really bullish and targeting these levels up here. Dollar versus the Japanese yen, it's just trading sideways. I do not have a strong view for this market, and I do think that we'll trade sideways between 106.61 and also more importantly between 105.99 and 108.17. Aussie dollar versus the USD is continuing to be bullish, so we have few ideas. One of them was to buy here. Originally we even said look to buy here, which stops just below, but on Thursday I think I said it, we said look to get involved around these levels. So far all good, not really going much higher though, is it? But we're dealing with an uptrend. So you have an uptrend in the euro, you have an uptrend in GBP USD, and you have an uptrend in Aussie dollar versus the USD. Let's take a look at the CAD. So CAD here bounced from support as we talked about. The market went upwards, and this would be a good opportunity to look to sell because we're stuck within this descending triangle. And if we do trade below 34.79, and that's going to turn bearish, we can see the price trade down to 34.91 or 32.91. But for now, people buying here like last week. So if we go down, I would still remain bullish and then look for a move to the upside. Okay, these are gold prices. Gold prices are going upwards, which is nice. And I think here, last week was just to buy down here for this to go up. In fact, we've been looking to buy for some time. And I reduced the trending funding level now. It's at 1784. And if we take out this level, I know it's not like a pure rectangle pattern, but if we do take out this level, we could probably go up to 1840. And that wouldn't place us too far away from that ascending triangle pattern. The same pattern we discussed when we traded here on June 22nd. I said we can go upwards. And also, remember we talked about being bullish from down here. So it would have been a super nice move here if we could reach all the way upwards. I traded bits and pieces of these, you know, unless you have some really long-term view and like able to sort of hold positions for a long time. Of course, it's difficult. I like to go in and out if I can and trade the smaller patterns within the big patterns. Of course, sometimes the market just rallies really strongly, and I would keep it to its ultimate target. But in this situation, it didn't. So I've been putting my money to use in the other places. All right, this is West Texas crude oil, and we're still dealing with an uptrend, and we're also dealing with a bit of an ascending triangle. Brent crude looks pretty much similar, but this is West Texas. Take out 41.35, and we could probably soar higher. This is just based on this chart. We're dealing with an ascending triangle, a short-term triangle like that, and I guess you could even argue this to some extent being a big pattern, but I think a 7.78% move is sufficient here, and one can either buy dips like down here or breakouts. German DAX, so I pushed this up the buy spot. Remember last week I said look to buy here, the market went upwards and we took out these levels. You got double top, high and high, and then this level here that gives us that target of 13,285, and that is what I'm aiming for. And then we had, I lift this up just now, I just pushed this upwards to 12,825, and if you miss this out, you just need to wait for a pullback. Dow Jones, I talked about this one on Twitter. We talked about this as well on the weekly market update. So we said we have a massive inverse head and shoulders, head, left, right shoulder, had the breakout. This was the follow-on on that breakout. And now we had a correction to support. If we do go down to 458 again, this little spot here, I think people are going to be buying. I don't think we went all the way down here, but if you were watching this, it wouldn't have been so difficult to just manually buy at that spot. Nasdaq 100, the idea was to be buying at different levels. So it was just above here and here. Both of these positions are now in profit. Obviously, with the benefit of hindsight, we're looking at the markets today. You know, I would just, if you bought down here, congratulations. I would just keep it to attack the upside. And if you're not long, I will wait for a pullback. S&P 500, if anything, if we go down to 31.74, I think people are going to be buying. And then we have FTSE 100. That is in uptrend overall. We're also in an ascending triangle to some extent. You got resistance. I know it's not perfect, but upward trending line, and then you got resistance. Take out this level, we can probably go all the way out to 66.93. And if you want to get a head start, one could be bullish from here, but I wouldn't be too heavy on this one. I would just have like 0.2% or 0.2 of whatever your typical risk is, maybe a quarter of your typical risk, and then add the rest on a breakout. And I think that's pretty much it. Let's see if you guys have any questions. Just give me a second here. I'm gonna load the chat here. So in the chat box, we have True Invention. Good morning. I hope you're doing good. And we have also Maurizio Oliveri. All right, guys, I think we're going to wrap things up. I don't have any question, which is all good. And if you do have questions during the day, as always, just ping me via AlexFX00. As well, if you're new to this, you want to know more about how I trade, hopefully take your trading to the next level, check out investingcube.com. On InvestingCube, we have a lot of free content. Not free, yeah, well, it is free actually. You got the free trading course, you got the trading coaching, and if you want to have like just a bit of an intro, we have a few beginner articles here. They're mostly, it says like forex trading, but you can skip those if you're trading indices. But a lot of these different things here apply for indices and commodities. It's the same thing with the premium course, which you get for free with an ATFX trading account. You don't have to pay £799 for it. You can just get it for free. If you sign up here, the guys from ATFX will give you a call. And if you do that as well, you get a few emails to get going. It's super easy actually. You just need to have an account with ATFX. When that's been verified, you get access to the account. So super easy. All right, guys, have a beautiful day and a beautiful week. I'll catch up with you guys later on. And don't forget as well to follow me on Twitter at AlexFX00. Thank you and bye-bye.